Hey, it's Terry and you're watching Invest Roundup. News of COVID-19 vaccines from the past few weeks have propelled several industries and companies forward. Airlines and travel companies have been experiencing a surge in share prices since the vaccine announcement. However, stock market experts now seem to have their eyes on the small-cap company in Germany as it slowly emerges as an unlikely hero in vaccine distribution activities. Joining as the latest addition to the movement of boycotting Chinese products is the land down under. Several companies in Australia has been reported to start a boycott on Chinese products and more of them are coming on board. Meanwhile, Elon Musk recently surpassed Mark Zuckerberg as the world's third richest man after Tesla was added on the S&P 500 index. But analysts worry that Tesla's revenue may give investors problem in the long run. And speaking of long run, Slack recently got a new source of firepower to fight longtime rival Microsoft after it was recently acquired by SalesForce. How will these joint forces play this game? Well, let's find out and get into this week's news. Disclaimer: whatever stock or news we talk about is not a recommendation to buy or to sell. These are all just news we deem important, things we think you need to know about if you're invested in the stock market or if you intend to invest. First news item: the land down under joins boycott. Joining the likes of US and India, Australia has now called for boycott for Chinese products as hostilities start to grow. This was proposed by Senator and One Nation leader Pauline Hanson last week after China's so-called economic attacks against Australia when they slapped a jaw-dropping 200% tariff on wine exports. To make things worse, a Chinese diplomat even posted a Photoshop image of an Australian soldier holding a knife to the throat of an Afghan child last Monday, after claims were made that Australian Special Forces soldiers were murdering Afghan civilians. Prime Minister Scott Morrison had asked Twitter to remove the image and sought an apology from the Chinese government. Pauline Hanson also said that the market shelves are only full of Chinese products because the previous governments have allowed other countries to bring in their products to Australia and destroyed their own manufacturing industry. The country used to produce 40% of their products locally, but it has since been reduced to a meager 6% due to increasing imports and causing the country to be heavily reliant on them today. Ms. Hanson urged Australians to avoid Chinese products in every little way possible, as this would put pressure on the Australian government to support local manufacturing businesses. Her call for boycott was echoed by Kenneth's self-storage boss Sam Kenneth, who said Australians need to fight back against the Chinese government as he claims this to be an act of revenge after the Australian government blew the whistle on Beijing's human rights violations and their handling of the COVID-19 pandemic. He was also quoted urging fellow Australian businesses to review their supply contracts as the Chinese government has been proven to be difficult to trust. The whole feud began in 2019 when Australian intelligence services concluded that China was responsible for a cyber attack on Australia's parliament and three largest political parties in the run-up to a May election. Then, in April this year, Prime Minister Scott Morrison began approaching fellow world leaders to initiate an inquiry on China into the origins of coronavirus pandemic. In response, China immediately slapped an 8% tariff on Australian barley, suspended beef imports, and told their students and tourists not to travel to Australia. As much as the government is all fired up about this boycott though, experts have not been too keen. News.com said this will leave Australia exposed and having only minimal impact on China, while Global Times has called it an arrogant move. Analysis had shown that it will cost China around 0.9% of their GDP if Australia stopped buying their goods, but if the tables are flipped, it will cost around 16% of Australia's GDP. Second news item: Mark Zuckerberg is not the world's third richest man anymore. Elon Musk's net worth recently surpassed Mark Zuckerberg's, making him now the third richest man in the world after Tesla's stock price jumped again last week. He gained $12 billion in wealth overnight, hitting $114 billion on November 17 after the announcement of Tesla's addition to the S&P 500. This avalanche of wealth, however, is not in cash but in equity, as Musk owns a majority of Tesla's shares. The billionaire maintains that he will continue his cash-poor lifestyle and has mortgaged many of his Los Angeles area mansions. Fund managers are optimistic with the share price increase, and one manager even said Tesla stock could hit $800, even though its current share price is just barely grazing $600. He even went to explain that Tesla is a majorly misunderstood company. It's not merely a car company, but one that is evolving very quickly into much more than that, as the company slowly starts to dabble into energy storage, smart grid services, and a whole lot of other things. Tesla shares have increased over 550% year-to-date, and many momentum traders are predicting a continued upward trend despite slowing sales growth, a falling market share in Europe, and recalls in the United States. For some institutional investors, however, the stock has already reached ludicrous speeds and warned investors to exercise caution as the stock now seems to exist in a kind of twilight valuation zone, which is true considering how far the current share price is from its intrinsic value. These experts warn that the highly anticipated inclusion in the S&P 500 has had no impact on Tesla's fundamentals and has nothing to do with the company's ability to generate more profit, thus may not help investors at all. With a market cap of over 550 billion, Tesla is now worth more than the entire automobile industry put together, excluding Tesla at the start of 2019. This is close to Berkshire Hathaway's market cap. The difference here though is that Berkshire had revenues of 327 billion and earnings before interest and taxes, called EBIT, of 107 billion the last fiscal year, whereas Tesla earned only 25 billion in revenue and an EBIT of negative 0.6 billion. Basically, really low profitability. Musk, however, is vigilant and quick to warn his employees of the situation so that they can buck up. He was reported to have sent an email to his employees saying, "When looking at our actual profitability, it's very low at around 1% for the past year. Investors are giving us a lot of credit for future profits, but if at any point they conclude that's not going to happen, our stock will immediately get crushed like a souffle under a sledgehammer." Tesla will officially join the benchmark S&P 500 index on 21st of this month. By the way, before we go on to the next news item, click on the subscribe button below now so you'll be informed the next time we upload a new video. That way, you won't miss any important market news. Third news item, has Salesforce been slacking off? You bet they are, because it's official. Corporate messaging platform Slack will soon be a part of Salesforce. Last Tuesday, cloud-based software giant Salesforce announced that they would buy a workplace software company, Slack, for $27.7 billion in cash and stock. For those of you who don't know, Slack had just gone public middle of last year in 2019, and if completed, the acquisition will end Slack's brief run as an independent, publicly traded company. While this news would come as a surprise to some, this acquisition is really just one of the bigger deals signed this year by tech companies who are looking to capitalize on the growing trend and the beginning of the global shift to remote working. Just last month, Adobe announced it has plans to acquire Workfront for $1.5 billion. In July, Australian software company Atlassian announced the acquisition of Mindville. In Slack's case, Salesforce said it has plans to incorporate Slack's communication software into all aspects of its cloud software offerings, which would help their customers to make a more holistic digital transformation following the global shift. Anyway, approximately 90% of Slack's customers are already using Salesforce, so most users may not even feel a difference or any form of foreign interference. The CEO and founder of Slack, Stuart Butterfield, had also maintained that Slack will remain relatively independent after the acquisition, allowing the team to do more of what we were already doing. In the last few years, Slack had been faced with increasing competition from Microsoft, who came out with their very own workplace communication software, Microsoft Teams. And as this was bundled together as an addition with the company's popular Office 365 suite without any extra charges, it has caused Slack to be sidelined. With this acquisition though, Slack is now very likely to get the boost it very badly needed, as being with Salesforce will make it a more sizable opponent to contest Microsoft's distribution strategies. Slack was founded in 2010 and previously attracted takeover offers from the likes of Google, Microsoft and Amazon due to its growth, which were all ultimately rejected until now. In this acquisition, Slack's shareholders are offered $26.79 in cash and 0.0776 shares of Salesforce stock in exchange for each share of Slack. This year, Slack's shares have increased around 25%, although staying below their IPO price throughout until just recently. And finally, we get into more vaccine news. A new COVID-19 hero emerges. Cheers over Pfizer's vaccine discovery last month were cut short in some countries as people were hit by a dawning realization. They do not have a storage solution to Pfizer's vaccine, which needs to be stored at a temperature of at least negative 70 degrees Celsius, which is colder than winter in Antarctica. This was when an overnight hero suddenly emerged. A little-known German company, Vacutech AG, that specializes in producing equipment that keep vaccine doses cold during shipping and storage, has become a hot stock. Its share price soared 84% in November when Pfizer and Moderna reported success in developing shots against COVID-19, and went up even more when they announced that they've signed an agreement with a top global pharmaceuticals manufacturer. This means Vacutech has more than tripled in 2020, putting it among the top 10 performers in Germany's broadly composed CDAX index. Analysts are also seeing Vacutech's revenue rising to 99 million euros in 2021 from an estimated 72 million euros this year. Vaccines from Pfizer and Moderna need to be kept cold during storage, and it's been proven that the company's equipment can handle the lowest temperature needs. Containers like those produced by Vacutech have been used by both pharmaceutical and F&B industries, whose products are perishable and need to be delivered under special conditions. Airlines all over the world are now also gearing up to handle what is described as mission of the century, to deliver salvation all over the world in the form of COVID vaccines. And you thought we could only see this in Hollywood movies. Deutsche Lufthansa has announced it is preparing its fleet to airlift millions of doses of the vaccines to end the global pandemic. American Airlines Group and Delta Airlines have said they've prepared to handle shipments of the Pfizer drug. Garuda Indonesia was certified last month to transport vaccines to Southeast Asian countries with a major outbreak. Singapore Airlines said it will prioritise cargo capacity for transportation and has signed agreements with cold chain container providers, Vacutech included, to maintain the vaccine's integrity during transportation. International Air Transport Association (IATA) CEO was also quoted saying that this will be the largest and most complex logistical exercise ever. And those are the 4 important investment news we've had to share with you this week. Once again, we encourage you to get more information if you'd like to act on any of the companies we've shared about earlier. Comment below and tell us what you'd like to see on Invest Roundup, and share this video with your friends, especially those who are vested in the stock market. See you again soon!